So we start with the budget, right? So Jeremy suggested that I look into the winners of the budget, and Jeremy will look into a little bit on sort of, I suppose, not so fortunate ones on the budgets, yeah. So the first winner sort of comes in the average income earners. So there was a reduction on the income tax return, right? So just as a bit of a refresher, what's the income tax that we pay? At the moment, the current tax is from $0 up to $18,000. There is no tax. From $18,200, let's say, up to $37,000, there is a bit of tax, 19%. Then it goes to the next bracket, which is 87 grand and 180 grand for 32.5%, 37%, and the highest marginal rate. So what the budget sort of proposed is that from 1st of July 2018, what they're doing is that they're extending the band, which is the 37%, is 32.5%, my apology. They're extending that a little bit more. So rather than having up to 37 grand at 19% and up to 87 grand at 32.5%, they're extending that to 90,000. Subsequent year, they're extending that band a bit more to 120,000 and 200,000. So what that means is that there's just a little bit more sort of less tax, I suppose. But what's also interesting is that more from the corporate entity point of view as well, that the individual, there is a bit of a tax reduction. There is a proposal from the corporate entity that there is a bit of a tax reduction as well. The company tax rate, as you know, used to be 30%, yeah? So it sort of dropped to 27.5%. And what the Commissioner is sort of suggesting now through the budget is that potentially progressively over a period of time to reduce it back to 25%. Now, to me, some of those numbers are very important. Why they're very important? Because as an investor, from our planning point of view, right? So we always used to say that, well, whether we buy it on an individual named Jeremy, whether we buy it on a trust, because we may be entitled to a 50% CGT discount. So if you hold the asset for more than 12 months, you get a 50% CGT discount. And that could be an incentive on an individual. And we used to say, well, the corporate tax rate is about 30%. And even if I'm paying at the highest marginal rate, which is 46.5%, because of the discount, my tax rate is only 23.25%. And the company's rate is 30%. So there is a big gap. But the gap is sort of reducing, right? That's sort of 30% now 25%, as opposed to individual maximum 23.25%. So that's something comes in as a little bit of sort of a planning proposal, I suppose, over a period of time. Yeah. So there were a couple of comments came in on the budget in terms of the seniors to keep what they have a little bit more on their side, access the equity on their home for the retirement, and face a shorter waiting list if they're seeking care at home. One thing which came into my attention quite a bit is a concept called reverse mortgage, right? So reverse mortgage, I suppose, Ross, reverse mortgage being around with St. George Bank for a little while, isn't it?
Yeah, it's been around, I reckon, probably about 8 years now.
Yeah. So what the reverse mortgage does is that, and interrupt me if I may, what the reverse mortgage does is that it allows with a certain very strict condition that you can utilize your mortgage, and rather than sort of mortgage being repaid, the mortgage gets capitalized on your existing mortgage. Yeah. So it's a way of, say, the elderly couple who sort of has big asset with fundamentally not much of a sort of a mortgage left. It's a way of generating a bit more cash flow for them. So that's something that's being encouraged a little bit on the budget side of it. The small business, I suppose the main winning on the small business side of it is that there is a $20,000 one-off deduction for any capital asset being purchased by the small business. So it was supposed to be abolished as of 30th of June 2018. It's now being extended for one additional year. Yeah. So there seems to be a whole lot of contribution, I suppose, is that the school contribution. Jeremy will go to the next page. So there was quite a bit of contribution from a state level as well. And there is a bit sort of a winning from the parent side of it. But what I take a couple of things in here and a couple of things which is not in there is that number one is that where it says that 10 years, 75 billion infrastructure project for various states and territories. Yeah. Once you see the breakdown of it, of what's that sort of a 10-year, and I did a little bit of sort of calculation on my own, and some of the statistics, what it shows is that over the next couple of years, the expected contribution, and this is 10 years, 75 billion, right? So over the next couple of years, New South Wales is supposed to receive 1.5 billion infrastructure contribution. Queensland is supposed to receive 5.2 billion infrastructure, and Victoria is supposed to receive 8 billion. Yeah. So the question that I ask in my mind that how is that relevant to us if it is? Yeah. From a property investor side of it, right? So if the investment is there in a particular estate, we sort of naturally expect that, well, the infrastructure is there, the cafe culture is there. So we sort of expect from the infrastructure and the cafe culture is that sort of, I suppose, brings in a bit more sort of the property investment. Yeah. Some of the things which, not sort of on the slide, and some of the things which I say is that there was quite a bit of discussion about Medicare levy in the budget, yeah, and there was quite a bit of discussion that whether the Medicare levy will increase. So I see that as a winner, that Medicare levy hasn't increased. There was a bit of a discussion on the budget in terms of the superannuation side of it, and whether some of the taxes on the superannuation will change. At the moment, the tax rate is 15%, the CGT rate is 10%. Whether that will change, that hasn't happened. There was quite a bit of discussion prior to the budget that whether the negative gearing, whether we would dare to touch the negative gearing. And, well, the answer is that I suppose the government was not brave enough, thanks God. So that sort of helped, right? Yeah, so, and also with the tax rate side of it in the retirement phase also stayed. So those are some of the winners.